All right, welcome back. We got a little mindset video here for you today. The market's been on a rip-roaring rally. We are back in a bull market in the NASDAQ. Who would have thought? Last month we're in a bear market. Now we're back into a bull market. So is it too late to buy stocks after this rally? Here's my honest take on the current market surge. The market has rallied sharply over the last few weeks, and naturally, I'm seeing the same questions everywhere. Did I miss it? Is now the time to buy or wait for a crash? And let me be clear, this mindset is flawed. The market truths that you need to remember is when the market goes down, you should feel happy. That's when the deals are right in front of you, when the market goes down. And when the market's rallying, like right now, it's great for your portfolio, but the opportunities become fewer. So it's not a bad thing. Your stocks are going up, but there's less things to buy. There's less opportunities out there. And trying to time every top and every bottom will lead to paralysis and missed gains. So you don't know when the bottom is until the market recovers. We didn't know that was the bottom a few weeks ago. Nobody knew. I mean, Trump tweeted it, but no one else knew, and no one believes him when he tweets that anyway. So we don't know until after the fact. So trying to wait to buy until the bottom, you're going to miss it every time. And if you always try and sell the top, you're probably going to sell too early, and the market keeps going much, much higher. So don't try and time the market. Just focus on time in the market. So my strategy right now, I'm still buying. I'm less aggressive than I was last month, as there are fewer opportunities when the market rallies. But there are still many companies in corrections or off their highs, and just because some names have rallied and the stock market has rallied doesn't mean there's no longer great investment opportunities out there. And if you bought last month, if you bought the dip last month, you did your job. This is not the time to sell just because you're up in the short term, or maybe you're back to break even. And we'll look at some examples at the chart here in a moment. So for those that are feeling FOMO, it's okay. You didn't buy last month. You don't have to go all in right now. You can still participate buying some shares now with a little bit less ideal risk reward, but it's still better than being stuck on the sidelines forever. So if you think the market's gone up so much, I'm going to wait for a pullback, it may never pull back. And even when it does pull back, what's to say you won't say it's going to keep going, so I'm going to keep waiting. So you're in that paralysis mode if you're waiting and you never have bought this dip. It's better to just get in the market a little bit. Now, you don't have to throw your whole life savings in. You can, tow your way into the market, but it's better to slowly make your way in versus I'm just going to wait. I'm going to wait. So the risk of buying today, if you bought something today and the market goes down for a month, you may be sitting on some short-term losses. This is a great example. I bought a bunch of Amazon in my retirement account on the day of the inauguration. So I watched Amazon go from 190 where I bought it to whatever it went down to, and I'm finally back in the green. I had to wait a month. I didn't think at all during that time, I shouldn't have bought Amazon. I'm buying Amazon in my retirement account for when I'm 70. So what difference does it make if I bought it at 190 or 170 when I'm retired? It doesn't make a difference. It's a $20 difference in my purchase. So yeah, I had some short-term losses, and it took me a month to regain that. Maybe sometimes it'll take longer than that, but if I didn't buy, maybe I'm sitting there and I never ended up buying. If I didn't buy it at 190, maybe I saw it at 160, whatever the low was, and said, oh, it's going to go to 130, I'll buy it at 130, and I missed out the whole time. So that's the risk of not buying today, or the risk of buying today. The risk of not buying today is that you're going to miss the long-term uptrend, and when markets keep moving up, you may never feel ready to re-enter. So I've seen this before, and I feel like there's some deja vu occurring right now. So looking forward, we're still in a constructive market. There's strong fundamentals, improving sentiment, and there's selective opportunities that still exist. And most importantly, invest with a plan and don't make predictions. It's going higher. It's going lower. I'm going to wait. I'll sell here. I'll buy here. Have your plan. We're here to invest for the long term. So have your plan and don't make predictions. I'll buy when this happens. I'll buy when he says this. I'll buy when this tweet happens. Let's not make predictions. Let's just have a plan and stick to that plan. So real quick, let's take a look at a couple of charts. This is the pandemic crash. This is the NASDAQ. We had a nice rally in the NASDAQ, sudden crash, and then we recovered back up here. Now at this time, the economy was still shut down. Everyone's wearing masks, no one's going anywhere, you can't do anything. But the market recovered. And at this time, I know a lot of people that sold stocks saying the stock market's gonna roll right over, nothing's changed, we're going to hell in a handbasket. And there's a lot of people that got out on the way back up, and then look at what they missed out. So this is the NASDAQ at $9,000. Or if they didn't buy here on the way down, the market comes back up, I missed it, it's too late, I shouldn't buy here. The market's already back to where it was and the economy still sucks. Look at what they missed. The NASDAQ, 9,000 bucks, 2020. They missed out on a 50% rally to get here in 2021. We had a terrible year in 2022. You had another chance to reload, and then, just bananas here. So the NASDAQ, I can't even zoom out enough. This was 9,000 on the NASDAQ. We're at 21,000 right now. So, think about that. And these weren't old people that needed the money to, pay their Social Security bill or whatever, pay their long-term care insurance. These are people my age that were selling stuff. And they missed out on all this run here in the NASDAQ. And when we look at right now, we had this fast move down and we're almost back to where we were. Now, I don't know if this is going to be a repeat of the pandemic and we just rip-roar to 50,000 over the next few years. Who knows? But just because we're 5% off our all-time highs doesn't mean that there's no opportunities in the stock market. Now, we're probably due for a pullback, but are we going to go back down to these lows? I don't think that's likely unless things really devolve in the economy. This was a huge shock of headlines, and then those headlines have been walked back. So we could always see a recession. We could always see a black swan, something crazy happening, but there's a lot of companies that are doing very well out there. So like I said, the opportunities are less out there in the market. If you buy the S&P or the NASDAQ, we're only 5% away from the all-time highs. So the risk reward isn't that great because we're 30% from our lows and we're 5% away from our highs. So the risk reward there isn't the best. But there are some great companies out there still where the risk reward is still pretty solid, in my opinion. And this is not financial advice. Read the disclaimer down below. This is a dude talking to a computer by himself. So here's some good opportunities, in my opinion. Google is still down 22% from its all-time high, barely up off of its lows. Now, Google, there's a lot of sentiment issues there, but to me, that's a company that's still operating at a great clip. Let's take a look. Recent earnings, $90 billion in revenue. For the last 3 months, that's up 12% year over year. Search revenue that everyone's worried about is up 10% year over year at $51 billion for 3 months. Net profit of $34.5 billion for 3 months. This is 3 months for this business. So they're doing just fine right now. Now 10 years from now, maybe things have changed. 5 years, maybe. Another opportunity here, Apple. Apple down 18% from its all-time high. I don't have their earnings pulled up, but we can pull it up right here. $95 billion in a quarter. $95 billion. They authorized $100 billion of stock buyback. That's pretty good. If I had $100 billion, that's pretty awesome. You get to buy your own stock back. Let's look at Novo Nordisk, leading healthcare company, largest company in Europe, way off its high, in the toilet. Eli Lilly, healthcare getting killed. XLV, down from 160 to 131. You've got Pepsi. I'm not a fan of their products, but this could be a long-term opportunity for a company that's been in a long-term uptrend. Look at that. Off its high from 200 to 130. So there's stuff out there. ASML, one of the best semiconductor manufacturers out there. Off its high of 1,000, down at 760. Broadcom, almost all-time high. So not the best risk reward there. So there's stuff out there. Berkshire Hathaway on a pullback from the news of Warren Buffett retiring. Still near its all-time highs, but it's a pullback. It's an opportunity. So that is all I got for this rambling video. And I hope this helps everybody right now. Is it too late? Did you miss it? Time to go all in? I don't think so. That's not the mindset I have. I'm always buying stocks. There's times where I'm more aggressive and there's times that I'm less aggressive. And now is a time where I'm still buying, but I'm not as aggressive as I once was in the recent past. So I hope everyone's doing good out there and enjoying this crazy market that we have. So that's all I got. All right. Peace out.